It kept the lower BB, held support,
Mm-hmm.
and now we're hitting the middle BB as resistance.
Okay.
Look how wide these things were too.
Mm-hmm. And it needs time to tighten up. But you can see, look, if you can see in the last couple of candles, you see it with those upper wicks that the bears rejected higher prices. Right after that tower bottom, you had a nice tower bottom, but not a lot of follow through on it.
Because of the volume.
Yeah, I mean, there's not that much volume. And look at the sell-off. Look at that big, almost a red Marubozu candle. You can see there's a lot more volume on it than the big green candle, 4 candles later. Right? That's a hint. There wasn't, you see what I'm saying? That's a hint that the bears are kind of still in control of that
Well, yeah,
trend.
but it's like, okay, so selling's dried up, but
Yep.
we're the buyers. And
Where are they? Yeah. Even you covered a lot of ground right there. You see, you covered like 200, what was that? Almost $300 on not that much volume, right?
So because we didn't have any more sellers ready to get out, then it didn't take that much money flow to push this thing into this.
Just that there's not a lot of volume behind the candle, so it's not as valuable a signal, right? Like every candle has to be judged on the volume that's behind it.
All right,
So
well,
that just shows that on whatever the rally is, it's just not a strong rally.
well, we just closed this candle here. Okay, so
Okay,
we're in
was
our
it
third
4
4 hour,
hour?
4
4
hours.
hour,
So
yeah.
do we have this rejection
bar,
here?
Inside bar looks like you could argue two.
There's no body there.
Right. Okay, so you have a long-legged doji.
Yeah.
Okay, long-legged doji, inside candle, inside bar. That's probably gonna, I don't know. Maybe it's gonna bear break because you still have the upper shadows here. Not a lot of strength.
Well, I like
This
that
exponential moving average may or may not be support.
the EMA 12 holding support here. That's where this bottom is. So until we break this, I have to remain bullish, and I target our next EMA as our kind of our next target there.
What were you showing me in the 15-minute chart? You were looking at the pinch, right? But then when you squeeze out, it's not.
Well, this is a way you can kind of, and this is what we talk about like, what's a good time frame to use your Bollingers before they kind of get, I mean, this is crazy.
Right. What was the
It's
the
like
small intestine?
it's
into the
well,
large
it's like
intestine?
they look like two kidneys here, or like a bed, like a very high headboard, and this is the footboard.
Looks like the
and this
inside
is
of my car when I look at the engine, and you kind of see some kind of like
But all right. So look at we're very tight on the 15, but the 30 is super wide still. So that doesn't really tell you anything. This tells me that we got a long way to basically consolidate before we get any bigger. And our hourly, I'm sure, is just as wide there. Yeah, we're super wide now on our hourly.
Okay. Well, what do we think it's doing though? And like, what time are you? It's like you had to stick with the time frame though, and like follow that story.
All right. Well, okay.
So it's like, what story are you? What I mean? What are you using for your narrative right now? Like, what time frame?
Well, now on the hourly, my EMA 55 is now support, and because we got bought up on this previous hourly wick here.
Yeah.
I'm looking at this as kind of maintaining our bullish momentum.
Is this a bull pennant here? Is this a bull pennant?
I think
or is it a bull flag?
I think you're going sideways to kind of chill out the RSI, which
Yeah.
spiked up quickly. I think you're going sideways because you need to let your Stoke reset, which it's currently doing. Although I wouldn't be surprised for a second wave up here if we get another push higher.
Yeah, I mean,
And
I don't know, but you have all the resistance stuff. If you look back, before we broke down bearish, right, we had, what is this, 1 hour?
This is 1 hour.
So we have what, like 40 hours in a row in this range. So to break through it now, you need more volume. Is the kind of point I'm making, right? You see on the first candle, it covered $300, and then the price was rejected. Bears rejected higher prices above the upper Bollinger Band, right? Too fast, too soon. But there's no real follow through on it.
Because you're not seeing the volume.
Yeah, I don't see the follow through on it. I mean, maybe
it's waiting. I mean, it just has to chill out for a while.
You need volume to break through this level, though, right?
Yeah.
That's what I'm saying. Like, there's some.
Well, you need the market to have confidence that it's even a good entry at that point.
Well,
because
do you need confidence? Or you need gambling. People willing to gamble, who are greedy, right? Who want to make a little flip.
How much of this is an oversold bounce, and how much of this is actually a change in direction here?
But we're now on the wrong side, though, of this whole level, this area of traffic. We're now on the wrong side, right, of an important level.
Now, you were talking about how
this
is 6 hour.
Yep.
And this is the candle that kind of told the story.
It's like crazy deja vu, man. I mean, obviously that's a gravestone doji, right? And we kind of went back and forth how you thought it was a shooting star, and I agree it can also be a shooting star, right? Because classically with a shooting star you have a real candle body. A gravestone doji, it's a doji. What does that mean? There is no candle body, but you can have up to 5% of the entire candle's range. This looks to me more like a gravestone doji because the real candle body is really small. You have that really long upper wick, and you can forgive the lower shadow, right? It doesn't have to be a shaven bottom. It doesn't have to have no shadow. So both the shooting star and a gravestone doji can have A little bit of a lower wick there.
And the volume was tremendous.
It's the biggest volume candle in this whole picture. So
Since
that
we
kind of
had
set
this
the
move,
story,
yeah,
right?
yeah.
That set the story. And the bulls, you could see the bulls tried to break through it over here, and they were unable to. 1, 2, 3, 3. These two spinning tops, and then boom, bears took over.
So it allowed the trickle up to retest the wick itself,
Almost confirming the resistance. And you had some nice buy pressure here.
Yeah.
Right. What is this candle? September 4th.
Mm-hmm.
Some nice buy pressure, but then really no fall through. And then the following candle failed to break that high, and then the candle after that low high yet again. And then bears just took right over. So since then. It's tried to rally a little bit. We showed that tower bottom on the 4-hour.
We close our weekly in a couple hours from now,
right.
And we're watching another very engulfing candle there.
But what were we talking about? You and I were talking about earlier. Like we still have higher lows.
From what? From the hammer bottom or something?
Yeah, from this bottom back here in June, early June, and then early August, we still have higher lows. So and even today, if we can push the price up a couple, like $100, $200, you still get a decent lower shadow. And as long as we maintain a higher low, we're still in an equilibrium pattern. Because we have the lower high, higher low, and then boom, the price is going to have to decide here.
So what's the decide? Like, so
couple
where
weeks.
does
We're still a couple weeks out. I think this.
So this can tighten. You're saying this can tighten for a couple more weeks.
Like if your whole trade is based on the weekly chart, you have to say to yourself, okay, needs another month, right, before this trend is going to decide if it's going to reverse. And the bulls still have a working theory on the weekly chart. In my view, especially if you can maintain higher lows.
Yeah, I don't know. I mean, we've been watching, this RSI. I mean, you talk about being in that tight equilibrium.
Okay.
Here's your tight equilibrium. We were down through this line earlier in the day.
Sure.
Our bullish break has kind of pulled us back.
A symmetrical triangle consolidation.
Yeah. I mean, we're putting in higher lows now, but we're also putting lower highs.
Right, symmetrical triangle.
Yeah,
and a reverse hypotenuse Pythagorean.
But at some point, and you said it, this takes us
month.
Literally to October 1st is where the
so I think one more month, exactly.
Or the end of this month, through
But that's
this
if your thesis is a weekly, and that's what you're operating on. If you're day trading, $50 move is enough. $100 move is more than enough, right? If that's what you're doing.
Same with this bull cross of the MACD. It was happening, and then maybe not, and it's right there.
Well, you still have the bullish divergence here, right, with the histogram,
rising,
right? With the
rising.
higher lows,
and we actually put in last week. We put in our first green,
right, but
positive.
That's the noise, though, right? With any of these, like chalk and money flow and the histogram, you want to have a little bit of buffer around the zero line, of plus or minus, that you use to eliminate statistical noise.
Well, here's our zero line and on our chalking, and we currently have a higher low from our last support area.
So you go 0.02 to 0.02 in both ranges.
So this is
you ignore that, right? And then when you break above the 0.02 or below the negative 0.02, and that's how you should.
That's why here it wasn't until we got out of that 2 where this move was meaningful and then we could extend longer. Interesting.
And it really depends on how, Stock Goodies Chart School does a good job explaining these. It really depends how much of a kind of a buffer you want to put.
Yeah. All right. Well, this ends in several hours, so we'll keep posted on this one. Thanks, Cheds.